Hey, what's going on, YouTube? Welcome back to another episode of my trading vlog. Today, as you can probably tell right away, and you can probably tell from this screen here, the party's over. The momentum that I was riding up for gold and for the euro is over. I got stopped out. You can argue that I moved my stop a little bit too tight. I should have continued to let it run because it doesn't look too bad if I go on a larger time frame here. It doesn't look like the party's really over. The RSI is actually still pretty high. But I personally got stopped out for sure. And that happened because I don't really know what happened late last night. Things just fell off a cliff a little bit, and the retracement was a little bit more severe than what we had been seeing previously. And this could be the beginning of a reversal. This could be the beginning of a downtrend. Not really sure. Really, can't really say. But what we do know is that, let me see here. Last night, I had my stop for the euro dollar on which I had like 8 contracts. This is a ton of contracts, and I had my stop at the 25. You can see some activity right now that's happening over. You can just ignore this. Some activity is happening right now over during the rollover here. And I had my stop right at the 17.25, and you can see that I was definitely stopped out multiple times. And I actually coulda, woulda, shoulda. I could have taken profit here. And the thing is, this 25 pip drop from the 17.50. This is obviously the big price. It's a big quarter. It's one of the 4 biggest prices that exists in the currency market, if you choose to subscribe to the quarters theory. If not, then whatever. But you're looking at I could have taken profit here, shoulda, woulda, coulda, but I actually had my stop set a small quarter. Small quarter's 25 ticks right below here, and I got stopped out. 25 ticks with the amount of contracts that I had stacked was like $200. So I gave away $200 from this point right here. If you count the amount of money that it counted, it was from the high. It was like $500, right? So I was up like $900 worth of euro dollar here, and I gave away about half of it. Obviously, none of this is a loss, right? The worst case scenario was I only made $400 instead of making $900 or more, or locking it in. That's why I had the stops moved up. Now, can you argue, well, if you kept your stop where it was before on the green line, then you'd still be in the trade. You'd be fine. You wouldn't you wouldn't really have gotten out or anything like that. You could have had multiple contracts. You could have spread it out a little bit. All that is true, but for me, the party is over, and I actually had a day trade order to take this price right now, and I don't think it's gonna let me enter this order, but I'll show you what I'm planning on doing right here is entering when it hits. I'm kind of catching a falling knife a little bit here, but really I'm just playing the retracement. Hopefully the RSI doesn't drop below 40, and when it hits this 1675 price, and I can take the long. But yeah, it's not gonna let me do it because it's market's closed right now. So the worst case scenario was making $400, or like it was a little bit less than that actually. Instead of and putting it in my pocket instead of leave it, and I left like maybe $500 or $600 on the table. This is the worst case scenario for trading like this, doing what I did for the past week. Now, can you argue like I think this is much better than um, taking a loss, or taking a break even, or staying in the trade, because psychologically it's the worst case scenario. Psychologically, it feels like a loss, but mathematically on the balance sheet I actually took a profit. It feels like a loss because I was looking at a lot more unrealized profit, like I did yesterday. Same situation with gold. The gold, like you can see this giant retracement here. It fell off a cliff and then it went back up. I missed the move though. I had entries in here and back, and so I'm looking at this. Maybe I want to take it again, but yeah, no, I just totally missed this. I also had a little bit of luck with crude oil today. I took the quarter. I only got 1/4 out of it. I only got it out of from here. I entered at the 41.25, and then same strategy. I wanted to add another one when it dropped below 41, when it was at 41, but when, as of right now, I didn't really like what I saw on some of the smaller time frames. I saw this like massive, divergence, right? And it looked really, and I saw the this double tweezer effect right here. Like this price, it just cannot break this price. This is halfway between. This is half a quarter, so it just cannot break this half quarter. It had a chance at it, and it rallied back up like crazy, and then it tried again, failed, tried again, failed, tried again, failed. That's and whenever you see something like that, it's usually not the best sign. So I just moved my stop up, and I just locked in the 1/4. It's $125. So not a very active trading day for me here. What really hurts me the most is how I really missed out on the gold movement, because I had an entry here, and it missed me out. Take a look at this number. I had an entry at 1900, right, and it was 0.3 tick, or 3 ticks, 3 ticks, and I missed out on this almost 50-point move. 50 point. That's a $500 move. And I could have taken this here, but this was at like. I had an entry here. I didn't foresee this, because this all happened on the overnight. So this to me is. I feel like I could have left my stop. The thing is, even if I left my stop where it was originally, I would have been stopped out anyway. So this is just one of those moves where the market makers and the institutions, this is after hitting all-time highs. They were just booking profit, and that massive booking profit led to a retracement that would have stopped out most novices, including myself. Fortunately for me, I got stopped out in profit, but that doesn't mean that it was any that it was the right move necessarily, because as you can see, I am not in this anymore, and I couldn't catch it afterwards. So I woke up and saw this. I saw this activity a little bit later today, then like at like 8 o'clock or 8:30. I didn't really get to my computer as early as I usually do, but I had an order at the 25 actually, and I didn't get filled because of, on this wick here. So on gold, it seems like I need a little bit more of a buffer, because it's still moving. I'm still bullish on gold. I just keep missing the entries, and I don't know. I mean, I'm looking at taking a retracement down here, this area. I want to get in, and this is one of those things where, like, I want to be disciplined and stick to my rules, but I also don't know when I'm supposed to get in, right? And so if I miss it by like 3 ticks, what am I supposed to do? So a little bit of FOMO going on there, not gonna lie. It was a profitable day. It was I put in more money in my pocket than I usually do. um, and it's I can't really complain. However, it was I gave away a lot. I was up $500 on gold and 900 something dollars on the euro, and I gave away like more than half of that. And so that really makes me question, like, yeah, I mean, I'm glad that the worst case scenario was profitable, but it still hurts, right? So to me, that's a constructive way of managing emotions and your own mentality of like, oh, like the worst thing that happened, the worst you could possibly feel given the situation was that you made like $400 instead of $1,400. Oh well. So like I'd rather be positive than negative. But there's still a bit of like emotional like adjustment and an emotional management and mental capital preservation that I really need to do, and that could just be part of that could just be me having to suck it up and having to like just get over it, and or take trades again or be more diligent. I did a bunch of other interviews and stuff today that had me not really pay attention to this for the past couple of hours. I'm only seeing this just as of a market close at like 5 p.m. That's around when I got stopped out of the crude oil. So I got stopped out of every single one of my trades today, guys. I had every single trade today was a stop out. 100%. That is not a good day, technically, right? If I were to just say it like that. But every single trade was also stopped out in profit. So it's like, how are you gonna measure how successful that was? That part is subjective. So emotionally and mentally, I feel like I lost, but actually I won, right? And actually I actually made money. So it's like bittersweet kind of thing. I so wish I had stayed on board with this, or I could have taken a buy stop order. I don't know. There's a lot of potential here. Right now, I want to see this break so let me just put on loudspeaker. What I intend to do when I get off of this broadcast is I have every intention of buying gold again. I'm still not sure if I'm supposed to take the August contract or the October contract because of the rollover. I think they both volume looks good in both, and they're both pretty much sticking to their price action, even though there's a little bit of a gap, right? It's although yeah, I mean it is starting to narrow. Who knows, right? So my one is 1944, one is 1952. It's an 8-point difference. I don't know. I am looking at taking this at the 50, but I want to see the hourly RSI break above 60 as the market opens. If it doesn't, then I'm going to be very, very cautious, because we now have this area of supply resistance, like a level that's kind of working against us, whatever you want to call it. I don't really care for the terminology too much, but this is now your like the defense, right? If your trading is called offense, this right here is now defense working against you. When you're at all-time highs, when you're at something like this and you only see this blue candle, you don't know what you don't know where the defense is. Now that we know where the defense is, it's you got to respect it, right? It would be naive to pretend defense isn't there when it's showing you, right? So if I go to the lower time frame here, I can kind of get a better picture of how the defense is shaping up. And I mean, obviously it went 3 ticks up below the 1975, which is where I would consider taking profit. So you can see that the quarter stuff works more than it doesn't work, right? That's really the point of what I'm saying is it really simplifies down my entries and targets because I don't have to really think about it. The lines are always there. However, the drawback is, the thing that drives me crazy is when you come right to the edge of it and then you miss it. So this one, it looks like it would have gotten in, but it was like 3 ticks off. This one right here, 3 ticks off. Even these. The low here is 5 ticks off. This one is 8 ticks off. So it's like it really just kind of met. And even this one right here, 1900, 3 ticks off. This one, 2 ticks off. So you can see that like it does bounce. It does allow for a good entry. I just gotta front run it a little bit. I think I'm gonna take like I'm gonna add in a new word. I'm gonna add in the word micro quarter, mini quarter, small mini. So like 2.5 points or 2.5 points. So 250 is big quarter, 25 is small quarter, and 2.5 is micro quarter. So I'm gonna add that. I'm gonna add a micro quarter and use that as my buffer to try and get in a little bit more. It really does start to that's 10% of my stop, what I like to consider to be my stop. So I don't know, I am messing with my risk reward a little bit in that sense, but it's one of those things. When I'm trending like this, I'd rather be in than not in. I'm not comfortable taking market orders just yet. Like if I'm like here, right? I'm not comfortable just taking this market order at like, you know, the 17. Especially because the RSI is low, but also because I want to. The lines also act as like a floor. Like as like a step. So like once you take the next step up, right? It takes more work to actually go to the next step down than it is to like kind of stay there and then go up. So it provides kind of like a floor, and that's what I like about it. Although this one it was a battle, right? This one, it was hanging out around the 25 a little bit, and then this was scary right here. This little wick is scary. My stop would be somewhere in the middle, right around 12.5. That's exactly $125 for the micro gold. So that's right in my risk area. And so and the market opened. Let's see what happened. Okay, so it is bullish, right? So since the market is open, I am going to just do this while I'm live here. Why not? I'm gonna take this. And this is 125 pips, which is 12.5 points. So you'll see what happens. Let's see. Send the order. I have a margin call. Oh my god. This is so stupid and embarrassing because I am live right now. So this is the annoying part of carrying trades over. How much what are my working trades? I only have. Okay, so you guys are seeing something that you wouldn't normally see on my vlogs, because oh god, I hope the S&P doesn't rally upward. I wanted to hit this target. All right. Well, and the British. Okay, so I'm doing the same thing that I did last week for the euro on the British pound. That's the other thing. So let's take a look at that real quick. So there's the British pound has been slow last week, but the euro is slow this week, and the pound is picking up this week. So same idea here, but I can't add any trades right now because I am stretched out thin on overnight margin. So what are you gonna do? I have to figure something out because this problem keeps happening to me. I'm not losing. But it's like the maintenance margin is just killing me. So I either have to. I don't want to switch brokers because I like TradeStation and I like TradingView inside of TradeStation. But the maintenance margin for the style of trading that I want to do is really getting annoying. So I think that maybe, should I add more money? I don't know. Leave a comment and see. Let me know how you want me to, how you think I should be dealing with this. I'd love to know, if you're watching. I want to swing trade more than I want to day trade. That I know for sure, because I think it is safer long term. But the futures market requires, especially with this broker, TradeStation, the margin isn't really that friendly, although the platform is free. So it's like, what's better? Should I pay monthly for a broker that gives me much better margin rates, or should I put more money in the account and work with it? So I don't really like that either, because it's like it's just a lot of lazy capital then, right? It's a lot of money just to be able to place trades, whereas if I went somewhere else, I might be able to get better trades. I don't know. Let's you tell me what you think is the best idea. Just drop a comment below. But for now, I don't think I can take anything. I'm just holding this unless I get rid of this. I might get rid of this actually. Yeah, let's do that. Let's get rid of this. I wasn't really too happy. It was just chopping around anyway. And let's see what we can work with here if I were to just jump in the gold. Although gold is going to have higher margin requirements than the S&P, isn't it? Usually. So I talked about front running, which would put my entry at, instead of 1950 even, 1952.5. Same kind of stop. Let's see if this works. No, I have to call my broker. This is so stupid. I'm not losing any money, but they're saying I can't place trades because I don't have enough money in my account. Whatever. It's a problem I didn't expect to deal with. I didn't really pay attention to what the overnight margins were with TradeStation. It was just a platform, that my first platform ever that I started on. So maybe this is a sign that I should move on to a broker that has better margin offerings than TradeStation, in order to trade the way that I want. Right? I want to have a good amount of. I want to have a sufficient amount of cash, but I don't want to be inefficient with it. That's really what it comes down to. So yeah, you got to watch me do a little bit of rambling here today because things that just didn't work out the way that I wanted. Not a great day. I'm not very happy about it, but you know it is technically a profitable day, so I can't really complain too much. But there's a lot to think about. There's a lot to be desired here. This is far from perfect, far from where I want to be, and we'll see. So let me take care of this margin crap, and I will see you guys tomorrow for another episode of my trading vlog on YouTube. Stay tuned.